As investors continue searching for buy signals, one indicator our next guest uses is merger and acquisition activity. Let's take a look at some of these numbers. According to Standard & Poor's, so far this year, U.S. M&A volume is at $547.8 billion, which is up about 16% from this time a year ago. As for the worldwide total so far this year, it comes in at $1.8 trillion. So what does all of this tell us about the health of the market? Joining us now is Mario Gabelli. He is Chairman, CEO, and Chief Investment Officer at GAMCO Investors, where he oversees $30 billion in assets. And Mario, it's always a privilege to have you on the program.
Well, it's terrific. Talking about my favorite idea, which is how to make money in the markets.
Exactly. And
now we're talking about lovemaking, which is even more interesting. Corporate lovemaking deals are back.
So let's talk about that, because you've got earnings season about to get underway. We've got Alcoa after the close. Do you focus more on the so-called lovemaking, the mergers and acquisitions that we're seeing over earnings, or how do you look at the market and investing going into 2011?
We're not a very complicated. We are up substantially in a year like this year or last year because what we bought 2 years ago or 3 years ago. What are we looking at in 2013 after the next presidential election? What are we looking at 2012, 2011? So we gather the data, array it, project it, and interpret it. And the guiding principles are Graham and Dodd, fundamental value analysis. Maria, what is a company worth today? What is it going to be worth in 2 or 3 years? But we don't ignore the tops down. So when you have things like Beijing, what is China doing? When you have things like Berlin, what are the Germans doing with regards to the EU? When you have Bernanke with QE2, when you have things like Barack in terms of what he's doing to create jobs. So we keep all of that, but our decisions on how to invest is this company going to be the subject of someone else's lovemaking? Are they going to do financial engineering on their own?
And that's really what we want to get into, because I want to get your take on that and some stock picks, in fact, around that. But I remember the beginning of the year, you told us you thought the market would be up about 5%. We're looking at fractional gains, actually, on the year. So it looks like you were right on. You think it'll get there, 5% on the year?
Yeah, the basic thinking was that as you were ending the year of 2010, as we were ending the year and looking into 2011, we were going to see an air pocket in demand, sluggish economic environment for a variety of reasons. But then as we looked into the second half of 2011, some corrective action would take. So up 5. We're still there. Okay, and obviously we got there a lot different ways than I would have anticipated. I would never have thought about May 6th as an example.
Flash crash.
Oh, awful. And so that's still on our framework. And we think the market will overlook the first half of 2011 and look into 2012 and start providing some very good opportunities for next year as well.
So 5%, obviously,
you ain't got much more to go today. No, you're there.
But you've got plenty of huge moves in some of the stocks that you're involved in and some of the merger activity that we're seeing. So let's talk about M&A right here.
Right. Well, this is the fifth wave of takeovers. You had the first in the 60s, you had it in the 80s, 90s, and then the private equity guys 5 years ago. And today it's corporate buyers globally. They took a hiatus back in May because of corporate bashing in the United States because of what happened in the euro. They're back. And you have hostiles, you have friendly, you have overbids, like the bidding war with 3PAR by Dell and Hewlett Packard. You have, in addition to that, private equity coming back. It is absolutely a terrific opportunity. And it goes to show, Maria, a given company is worth a lot more than it's selling for in a public market.
So where are the areas that you're investing mostly that you think M&A action will take place? Is it telecom? Is it? I know you like natural gas. I want to get into that as well.
Well, the iPad, the digital revolution is here and it's global. Sending data, watching the Yankees play at midnight anywhere in the world and hit it on. You need instant information. You need speed. You need wireless. You need mobility. So the consolidation of the wireless companies globally provides a fertile opportunity. For example, why did VimpelCom, a Russian wireless company, want to buy Orascom, which is in Egypt and in Algeria? And in the United States, what is Verizon and Seidenberg going to do with regards to their position with Vodafone? One of our favorites is Millicom, a company controlled by a Swedish family that has assets in Africa and assets in Latin America. The stock's around $95, and we think that is the one that everybody's focusing on, trying to figure out, will the seller sell and what price to pay?
Millicom and U.S. Cellular.
Yeah, well, U.S. Cellular is a U.S. company based in Chicago, and it sells around 45.6. The symbol is USM, and we own it for our clients. We've owned it for a long time. We've been very patient investors, and the question for them is, will the family want to sell this? Will they monetize it? Will they merge it into TDS? And for our clients, we like it, we're buying it, and we don't mind, we have a margin of safety in the stock.
How do you come up with the screens to figure out who's going to merge?
Well, we don't screen companies. What we do is we assign analysts to industries globally. After 1989, when the Berlin Wall came down, we said we're following everything around the world. So if you drink it, we follow it. So, example, how did we find Dr. Pepper? But as a simple example, Maria, Mayor Bloomberg just announced yesterday he's trying to put a tax or not allow people to buy with their food coupons carbonated soft drinks. Health and wellness is a very important element, not only in the United States, but in the world. So children's pediatric nutrition. Can we get to the children early? Can we get them in 0 to 3? What are the Chinese going to do when they have more money to spend per child? All roads lead to Mead Johnson. Mead Johnson was spun off from Bristol Myers. It wasn't a public company before. Abbott is in that business. So we like Mead Johnson. We think it's going to be taken over. We think that was why it was spun off. And the question is the price.
So you're looking at large trends, health and wellness, large sort of fundamental shifts in the global economy, and you're trying to figure out who's going to, which companies play in that.
God, we should work together more often.
We should.
You say it better than I do.
Broadly
and
speaking,
quicker.
Before we go, broad economy, do you care about the unemployment numbers tomorrow?
We are concerned that the United States is 25% of the global economy, and 17% of the United States, or of the world, is the U.S. consumer. And we really need to have confidence. We need to have clarity. We need to create jobs. We cannot have the underemployed and the unemployed. But the 80% that are employed and that feel comfortable are spending again. Slowly but surely. We're going to muddle through the housing market. And so what companies will benefit? Will Home Depot do well in 2012, and should we buy it now? So that's what we're thinking about, and that's what we're doing.
Again, look at big trends and try and figure out the companies that are going to be impacted. Mario, always great to have you on the program.
Maria, what a privilege.
It's great to see you. Mario Gabelli joining us here at the NASDAQ.